Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. Joining us is Kris Sidial, Co-Chief Investment Officer of Volatility Trading at the Ambrus Group, to discuss the market's recent bout of volatility we saw in options expiration Friday, July 16th, and follow through in Monday's session. Kris, it's great to see you again. Welcome back to Trade Talks.
Thank you for having me.
And Kris, was this all about the Delta variant? Is there anything you can discern from how traders were positioned?
Yeah. So, I think the common theme that we were noticing on some of the news outlets was this gravitation towards the Delta variant, but that wasn't really the case. One thing that we actually noticed going into OPEX was we were kind of hovering around a key level on the SPX. I think it was SPX 4340. So a couple of deals were actually offsides on their positioning towards the end of the day. And that really accelerated the move kind of when we got under that key level. Towards the end of the day, offers were a little bit more aggressive. That really affirmed that this was more so due to some of the dealer hedging, especially around the time frame that it happened and kind of the routes and some of the institutional flow that we were seeing. That kind of affirmed that that was much more relevant than as opposed to the theme of the Delta variant being the reason why the market was actually selling off.
How did VIX perform relative to the Nasdaq Volatility Index known as VolQ? And what does this tell you about the composition of the S&P 500 and Nasdaq 100?
So I think one thing that was really interesting about the tech stuff that transpired during the sell-off yesterday, tech generally carries that heavy beta to the S&P. But one thing that we actually noticed yesterday was the S&P was relatively outperforming on a negative base, the tech names. So Vol and the S&P moved up, and tech was a little bit lackluster. So it's kind of giving me that thought process that the relative strength in tech may be picking up because it's been underperforming on a yearly base a little bit.
And you think that investors flocking to bonds as a safe haven is very incorrect. Why is that?
Yeah, so I think this is a big theme, and it's a little bit of a head scratcher to us. When we see these risk off type of moments, you see the initial flow that comes through, people actually looking to go into bonds as some sort of a safe haven. We've seen that move in rates kind of move down yesterday. But that's a little bit incorrect because we are consistently noticing these bond to equity correlation breaks, and they've been occurring for the last 3-4 years or so. So when we have days like yesterday or the day before where the market goes a little bit risk off and people are actually looking to hedge off their equity risk exposure by being long bonds, we think it's a little bit incorrect, especially in this environment. There's a lot more creative ways to actually hedge off equity risk than being long bonds.
Let's discuss August volatility seasonality. How could that potentially impact stocks? And what's the trade? Where are you finding cheap vol?
Yeah, so I think one thing that's pretty relevant is the seasonality effect of August. Generally because people are on vacation, markets are a little more illiquid. So that means, when there's a liquidity pull, that there could be excess variance because the market could have these type of fast moves in either direction. So it's something that people should notice and take heed to when they're thinking about their August trading. But two sectors that we're pretty interested in is actually the healthcare sector and the staples sector. Both have some sort of catalyst behind it. The healthcare sector, you have this vaccine news that's still playing prominent on some of the names in there, and also the inflationary theme behind some of the staples. So the vol in both of those sectors, compared on a relative level to the rest of the equity space, are generally cheap when you think about the 80% and out moneyness. Specifically kind of pricing in the wings. It's somewhat shocking to us that the rest of the equity space is not reflecting the type of value that you're getting in those two specific sectors.
All right, Kris. Appreciate the insight as always. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.
Thank you for having me, guys.